Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So today's recap is going to be a little different because in my studio is about 25 students from the University of Michigan. Very smart individuals, very innovative, very, what are a few more good words that are good adjectives? Just yell them out.
Clever.
Clever. What is that? Creative. Enthusiastic. Driven. That was, all right. So anyway, that's what they all are, to be sitting in our studio, you know, when school is out, and they could be definitely, you know, doing something a little different than looking at a bunch of green and red arrows. So what they're trying to learn is technical analysis, which is why you guys subscribe to our service as well, and how we basically try and approach the market on a daily basis. So with that said, you know, technical analysis could have kept you guys out of a lot of trouble over the course of the past 2 weeks. You know, 2 weeks ago, the jobs report came out, finally a better than expected number. We gapped up on that Friday. It was a gap and go. And some individuals out there with opinions said, oh, you know what, that was the top. You know, it shouldn't have happened. It was over emotional. And then a lot of technicians said out there, you know what, we gapped up. Okay, there's a huge gap there. And now we get to see whether it was emotional by whether it gets held and can we continue higher. Over the course of that week, you take a look at the chart and you will see here is that gap up, right? Here is your gap up. You know, after the jobs number, we had a nice little pivot there in the spiders. You know, it was coming up to that high of 1597 after holding higher right here. And then that's what it did. It blasted through 159.71. So here's your gap. If this was emotional, or if this wasn't something that had enough strength to be held, it would have came in and got filled. It didn't, okay? And then if you remember, going a little sideways here, you then had consolidation. Okay, here it is, nice little consolidation. And if you remember, within this consolidation, some more obsessions or some more opinions came out. So if you come back to me, during that time period, you started seeing articles, right? Articles about when's the Fed going to take the, you know, the punch bowl away? When is, you know, they're going to start tapering QE? Blah 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 blah. So technically, what we said is, until we pretty much get a close below a prior low, or maybe even can we stay down there for more than 60 minutes, that means the market's not caring about it, and either should you yet until we see a composure change. And then, lo and behold, you had Tepper on TV yesterday, who was a big bull in the market. Very, what are a few good adjectives? Driven, clever, smart, rich, billionaire. A few more for David Tepper. Anyway, you know, he's a big-time money manager that 2 years ago, when everyone was running for the hills and all the fear-mongers were running rampant, he said, I'm a buyer of the stock market. You know, the Fed has our back. It's like having a put. So him coming out yesterday, being a little extra bullish, or being still staying the course, drove the market above that technical level. If you go back to the chart, and here it is, and it was a nice clean breakout. And then today we opened up lower, went above the prior high, which was 165.35, and then continued to the highs. And yes, we had a little intraday pullback, but you know, it wound up closing fine, and that's just the way the market's trading. So with that said, you know, we've talked about what's keeping this market up. So if you come back to me, you'll know that we've talked about rotation. Okay, rotation. What's another word for rotation? Change. Okay, there you go. Rotation, from sector to sector to sector to sector. Rotating strength, changing where what sector has the strength and where the other sector doesn't, or consolidates. So with that said, one of the major sectors we've been talking about is the financials. Okay, last time I'm going to go to these guys. Name a financial firm, one that didn't go out of business. Goldman Sachs. Name another. Morgan Stanley, JP Morgan, Citigroup, all those guys. Okay, we talked about how they've had nice moves, and maybe they're another situation where they could continue higher. So let's go to Goldman Sachs first. Goldman Sachs, really nice, you know, price pattern. We talked about this descending channel. Okay, all you got to do is draw a ruler here. That was a trend that got broken right there. Then we held above it, and then yesterday we talked about a trigger above 151. There's your nice move. Today we opened lower, traded through yesterday's high for a little bit more cash flow. There you go. Nice trade there. Wound up, you know, still could see the highs here of 159. So that was a nice added trade on top of what was a really nice move all the way back from when it broke above this 121 right here. Okay, 121. Then you had a nice trend all the way here before it finally broke. You see that? Technical analysis is pretty easy here, right? This is a straight line. You can take a ruler out, and once it breaks, you get a bit cautious. And then here's another straight line. Once this breaks, you know, it gets back in motion. That's the simplicity of technical analysis. Anyway, if it was that easy, you know, it'd be, I don't know, I'd have a few boats. But anyway, you go here. There's the high. Goldman Sachs, nice move. Morgan Stanley got upgraded today. We talked about how this is getting stronger. This was your pivot. I came in flat Morgan Stanley. So, you know, when it ended up going through yesterday's high, I bought it, closed pretty strong. I still have a little bit left. Nice little cash flow trade. All right, here is your gap up. Okay, never got filled. It's been trending, holding the 8-day, and then finally broke out. So Morgan Stanley, you know, was a nice trade where I didn't have to hold it as a swing position, and I wound up making some extra cash flow. As far as Bank of America, everyone knows this is a, you know, core trade for me. Lots of different ways to do it. This was your last ad right there around 1241. Then I wound up holding above the prior high. Nice little bull flag here. Continued. I definitely have less Bank of America tonight than I had coming in, but why wouldn't you have less after a move from below 1150 all the way to 1344? Anybody know how to figure what type of percentage gain that is? Any mathematicians in here? From 1150 to 1344. Think about it. Okay, well, what is it? Who's got an iPhone? Anyway, nice percentage return. Okay, off the top of my head, 1150 to 1350, probably about 18% or so. So anyway, 18% in 2 weeks, not so bad, right? You get zero in the bank. That's why the stock market is working. Then we talked about other sectors that could look good. We talked about can Walmart and Target in retail join the other stocks since they consolidated. You go to Walmart, no, it's tricky because earnings are coming out tomorrow, but you know, there you go. Look at this nice clean move. We talked about this in today's morning call. Okay, and there it went. All right, so here you go. Nice descending channel, broke above, closed strong. Granted, you didn't have to take it into earnings tomorrow, but I guess someone thinks that it's going to be pretty damn good. Here's Target. Also, nice little clean move. Not as strong as Walmart, even though I think people in here would probably be shoppers at Walmart. Who shops at Walmart? Who shorts at Target? Which one? Target? Walmart. What about Costco? You guys probably Costco. Anyone with family and kids. Anyway, the retailers have been very strong, and Walmart, which was my, you know, what's it called, retail stock of the year last year, not because I like Walmart as a store to go in, but because of this. Okay, let's go to the weekly chart, which I just want to teach them something. Remember we were talking about how if a stock has a big move? Okay, this was Walmart, from below 20 all the way up to about 62. Okay, is that a nice move? Is that a nice gain? Yes, right? Big time. So what happens here? Some profit takers come in, you know, has to consolidate. What was the other word for consolidate? No, that was rotation, change. What? Combine. Anyway, here's your combining. All right, more or less consolidation. So last year when we were with Brian Sullivan, I talked about this decade of pain. It's a mega cap company. You can't go up in a straight line. So this was very painful for people who were looking for a follow through. Okay, but what finally happened once it broke above 62? It went again. A decade was long enough for new holders to come in here strong enough to consolidate what was a huge move from, you know, the go-go 90s. So anyway, broke above this and had a nice move last year. It pulled back, not a hell of a lot, but held higher. Actually, look where it did pull back to. It pulled back to this prior high, this prior point of reference, and then continued. So with that said, on a more shorter term basis, you know, then here's another area. Look at this. This was last year's high or the summer. Went above, consolidated above, and now it looked like it's going. You go to another time frame. Here's your daily. Boom. Cash flow. 2-day move. That's why the spiders couldn't go in any longer, because stocks like this wouldn't go down. Then you have TJ Maxx, which has been a big time winner. I'm sure some of you shop in TJ Maxx. All right, well, my co-host Brittany likes it too. Here you go, TJ Maxx breaking out, hugging the 8-day moving average, still on the move. No real setup here, but it shows you that there's strength. Lulu. You guys ever hear of Lulu? Any athletes or people that take spin classes? Lulu is, you know, a very nice stock that is now back at highs after a tremendous move that it's had. You know, this actually, how do we do this one here? Not that clean, but anyway, broke above 77, still looks good. Wasn't ready to break out for an additional cash flow trade today, but lo and behold, still looks okay, hanging out. As long as it stays above 78, 80, you know, the higher the percentage chance that it could break above this. So, as far as retail, the rotation and some money went there. Two laggard groups, which we kind of started looking at today to think about if the market does stay up here and people need some things to do. You look at the ags, you look at the MU right here. Does look like it's consolidating pretty well above the 8-day. At some point, maybe it breaks above this 55.29, and that could give you a nice move back to the highs. You're seeing relative weakness here versus the highs. A lot of other groups have already broken out, but maybe this is a catch-up play. Monsanto, which I've talked about, is best in breed many times. Look at this, new highs here. Okay, broke above this last little flag pattern. Nice little trend right here. There it goes. So maybe, again, the MU breaks out. And then I also talked about the OAHs. OAHs, the refiners, also somewhat of a laggard group. But if you look at the weekly chart here, look how tight this is. At some point, this could get going. So if I were you guys, I would be looking at this pattern here, saying, okay, can it hold higher here? Will this group ignite? Look at how many times it hit this. 1, 2, 3, 4, 5. Doesn't this look like a consolidation? Or what was the word? Combination? Anyway, here you are with this group. Highs are here. Not the best sector, but oil has been lower. But you go a little bit more close up. And if it breaks above this 44.76 to 45, perhaps there's a trade there, something to do, some money rotating. So with that said, some guys were talking about buying maybe a June call spread. You buy the June 45s and sell the 47.5s. Do any of you guys know what options are? You know a lot of things. Anyone else know what options are? No one else knows what options are. What's an option? There you go, the right to buy or sell a stock in the future. What would be an option to buy to go long? And what would be, not you, to go down? What? Put options. There you go. See? University of Michigan. They teach them a lot there. Calls, it goes up. Puts, it goes down. Does anyone know what a call spread is? Okay. I didn't know that until this year anyway. No, I'm kidding. So anyway, with this, if you don't want to be in it and you want to risk to find this stock one more time, you go to, or this ETF, you go one more time to this pattern here. And you will see if it breaks above 45, there's no reason why it can't go to 47. So you might want to either buy the straight up 45s or a call spread. Or you want to just hold it so you know it, and then boom, when it goes above it, there you go. And then stocks in this group are acting a little bit better. Halliburton's already starting to break a little bit above it. There's a lot of other stocks. I'm just not going to get into it right now because we have a lot to do here. So with that said also, we talked about the weakness in metals. We talked about the macro pattern broke into the downside and how on an intermediate level it was consolidating and gun to head should go lower. And today some of the bears got rewarded. Okay, we talked time frames, right? Here was your wedge type pattern, resolved to the downside. That was your one way out of this, okay? Or spot to adjust or maybe get short. Came down to longer term support. Okay, and then when it broke longer term support, boom, got broken on a macro level. But look at the size of this move to the downside. So it bounced a little bit. All right, bounced only halfway up. And then you had another tight little pattern here, okay, coming in the middle of this range. And then it broke below, couldn't get back above. And then if you remember yesterday, closing the lows, and if you took it home short, you got paid. Okay, now you have the next level down here. So overall, this to me is broken. If you want to short something that's broken versus something that's strong. I learned a little bit about that today. I've been holding a lot of different positions, and I added to my short in the spiders, and it cost me money and took money away from some better longs. So with that said, it is what it is. We talked about Apple. Apple being at an inflection point yesterday. Talked about the move after earnings. Was it an oversold bounce, or could it power higher? Has it really changed? Has any of you guys seen what's been going on in Apple? You again? No. Has it been going up or down? It's been going down for a while. How many in here have an iPhone? Raise your hand. Everyone has an iPhone. Does anyone have a Samsung? Nobody. Is anyone thinking about switching to a Samsung? No. Does anyone have a BlackBerry? 2. Why? No, I'm kidding. Usually it's the old corporate, dogs that like the keyboard. But anyway, everyone in here basically has an iPhone. So, I don't know. Stock doesn't still act well yet. So, with that said, Apple had a move since earnings. Okay, and then I was trying to be long yesterday, saying if it holds higher, I'm in. If it breaks, I'm out. My pivot was 450.50. You go to the chart of Apple, and you will see that, you know, after earnings, it had a spirited move through this 420, okay, right? Spirited move, and then hit prior resistance, which created somewhat of a double top. So spot to at least get out of some, okay, and then figure out whether it would hold higher. So it started to flag right here. So if you take these 2 days out of the way, okay, just to move it, looked like it could potentially, after hitting resistance, consolidate and go. So here I was long, and I said if it gets above 459.71, it could continue and maybe get to the 200-day. If it breaks below this support, which was 450.48, it's the same old apple that failed so many times. Failed right here, you know, nice little bounce, failed. Okay, this was 2013 to start. Nice bounce, failed. So with that said, you know, Apple has been hard to trust. Remember all these failures? That's why I think it has commitment issues. Here was a nice bounce too. Should never have broke below this level and failed. So to me, I'm like, okay, this was a nice move, paid some bills. You know, it was a decent tradable rally like we saw here, here, and a few other times, but who knows if it's for real. So with that said, the next day, this happened, okay, which doesn't look like much, but it could hurt you if you were long it, all right, which got me out around 450. Actually, I cheated and got out a little early because I saw it weaker. And if you got out there, you didn't care about this. Boom, another, what, $15. So if you sold it at 450, you know, it closed at 428, you saved yourself how many points? What's 450 minus 428? Yeah, okay. You need a calculator for that. Michigan grads. No, actually, I'm kidding. Great school. You guys must have enjoyed the basketball tournament, right? That was good. Okay. That's where my emphasis in college was too. You know, basketball, fraternities, sororities, not as much. Actually, no, that's not true. You have to be balanced. So with that said, 22 points. Would you have rather sold at 450.50 or held it for 20 points to the downside? What's 1,000 shares of Apple down 20 points? How much could you have lost? $20,000. Where would you rather have that $20,000? In your pocket. There you go. Anyway, as a trader, same type of thing. Why stay in the way and hold things that change? So this tight little pattern here that looked like it can go to the upside wound up negating to the downside. So it changed. Boom. So with that said, if you sold at 450, right, or if you sold here, you have the luxury of maybe buying a retest of this major area, okay? And it did come off that low. This was 422, and now we'll just see how it goes tomorrow. I'm back to tactically trading Apple. It is not on my A list anymore. Does anyone know what an A list is? And it's not to get into the club with the celebrities? No? Or the B list or the C list? What would you think the A list would be versus C list? What would you rather be on? The A list. That means it's a better setup, something that deserves your attention. So for me, we talk about the A list, the B list, and the C list. And since after earnings, Apple was on my A list. And then after it consolidated and looked like it couldn't go, it was still on my A list. And now it's on the C list. Meaning, I don't know, I remember you see, what was that movie when the girl was arguing with the guy outside with the bouncer? They wouldn't let him in because they got a little old. Knocked out. You're a bouncer. But anyway, you know, I bounced it off my list. So, you know, the banks have been on the A list, and now the banks are extended. They're not on my C list, but they're like on the B minus list. Any of you guys B minus students or B plus students? You guys are all A students? There you go. Okay. Overachievers. So with that said, you know, you got a lot of things going on in the market. But what is going on is that technically things are acting very well. Things could be extended. Things could stay that way for a long time. The oscillator is only like plus 35. You have stocks like Google just taking off. Look at that. That's powerful. Wow. You know, not giving anyone another entry. This was your, you know, your descending channel that it broke above to the upside. Look at that breakaway power, 915. You know, this was my, you know, high beta stock of the year. Who cares? I don't own it now, but hopefully you do. If you do, congratulations. Netflix also, huge mover. Okay, we talk about gaps. You talk about what they could lead to. This was your gap up after earnings. Okay, here was that 210 buy price. Here was your other buy price, which was around 220, and now it's at 243. Okay, this gap up led to this move. Digestion, this gap up led to that move. These type of strategies work, and you don't need to take the risk into earnings. You could buy them after. So until the composure changes, until we get a close below the previous day's low, try and stay the course. Try and do a lot of the same. Don't get frustrated. I got frustrated today. My computer went down 4 times, changed my mindset. I wound up revenge trading a few different times, and if I would have just taken a deep breath, I could have saved myself a decent chunk of money today and stayed with some stocks that I liked. Instead, you know, it was a little bit of a mess, first time I punched my computer screen. It happens, but I won. The computer screen lost, so it's okay. My face and then no broken noses, but I'll probably get a bill. So anyway, with that said, tomorrow's another day. Hopefully you guys made some money rotating around. Market composure is still there. Yes, we're a little overbought. So if I were you, I would maybe just have a little less on, be a little bit more tactical, but don't be stubborn. It's been Scott Redler, T3 Live. Thanks for the University of Michigan being here, and see you tomorrow morning at the call.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.